Hey guys, welcome back to the channel. Today we're going to go over which categories do well in a bear market. So somebody recently asked me what categories do well in a bear market. And first of all, what is a bear market? So a bear market is a drop of 20% or more of a stock index from its most recent high. So in the case of the S&P 500, its most recent high was around 61.44. So if we hit a drop of 20% from that point, we would officially be in a bear market. So when that happens, obviously most stocks are falling. That's why the market would be down 20%. But which stocks would do better when overall the whole stock market is falling? So let's go over that. And in no particular order here, number one would be consumer staples. So that'll be stocks of companies that provide things that you need. You need to go shopping to buy your toothpaste. You're gonna drink your water. You're gonna drink Coca-Cola, things like that. So if we could think of companies in that sector, you would think of grocery stores, maybe certain stores that offer a little bit of everything, like Walmart, products like Coca-Cola. So kind of things that people will keep buying no matter how much money they're bringing in, right? Number two would be healthcare. So you can think of it this way. When people need their medicine, they're going to keep, paying for their medicine no matter what the economy is doing. So, whether, we get laid off or you take a pay cut or something like that, or prices are just going up, you still need to keep yourself alive. So you're still going to be buying your medications, right? The third category here is going to be utility companies. So the utility sector, we could think of as companies that provide your electricity, your gas, your water, things like that. You need to keep the lights on. You need to keep the water on. You need to keep the gas. So those kinds of stocks will continue to do well. If not steady, they'll hold steady while the market's falling. Number four, dividend paying stocks. Think about it this way. When the market is falling, people want to flock to areas of the market that are deemed safer. So they look towards really big value, dividend paying companies as a safe haven. If we can think of some of the largest companies out there that have paid steady dividends over many years, Johnson and Johnson, McDonald's, Coca-Cola. I read a book recently that talked about some of the dividend paying companies that have never cut their dividend in 20 years and 50 years. We called these the dividend kings and things like that. So those are the kind of companies that people will probably end up flocking to when there's a bear market occurring. One of the commodities that does well during a bear market would be gold. So we're in 2025. Gold has been doing really well for the last 5 years. It's been doing tremendously well. It's got a lot of investors thinking, well, why should I be in the stock market when gold is at all-time highs right now? And it's true. When there's fear of economic collapse, recession, bear market, gold will do really well. People want to flock to something they see as safe, and so they'll buy gold. No surprise here. Number six, cash. When people are scared of, the market's already fallen, they want to avoid any more losses. They'll typically sell out and go into cash. But cash is a category of investment as well. It's not just, you put your money in your savings account or your checkings account. Cash is its own category. So what that encompasses is things like money market funds, money market accounts, money market funds, which you can buy in your brokerage account, treasury bills, treasury bill ETFs, things like that. So it'll be really short-term instruments that pay you some interest while your cash is just sitting there and you're waiting to deploy it for another opportunity. Number 7 here is discount retailers. So think of your really big stores like Walmart, Costco, Dollar General. These are places that appear to be on the cheap end, and so people, they have essentials there. They have your toothpaste, they have your milk, your eggs, whatever you need, right, to keep yourself running while the market's doing badly. You're probably still going to buy those things. So your number 7 would be discount retailers. And as a bonus here, some of the sectors that typically struggle when there's a bear market. Number 1 would be consumer discretionary. Those are stocks of companies that sell things that you want, but you don't necessarily need, right? Like your automobiles, jewelry, video games, the things that you would like to buy, but you don't necessarily need to buy to survive, right? Entertainment, going out to the movies, traveling, those kind of stocks would do poorly in a bear market. Financial stocks, so this one's kind of mixed. So we can think of like banks, brokerage services. So we think about the companies that offer you a website you can invest in, the Charles Schwab, those kinds of JP Morgan, things like that. When people aren't investing because they're scared of the stock market, they'll probably just take their money out of those accounts and put them in a bank account or something like that. Technology, especially if the stock really plummets, then you can see some of these technology giant companies lay off workers, leading to less innovation. And technology as a whole is just a really, really volatile sector. In 2025, I think it is the 4th worst performing sector up until we're close to June here. So technology is either doing really well or doing really poor. That's just the nature of the beast. And that does it for today's video. Thank you guys for watching. Hope you've learned something new here. You got some value out of this. Please remember to hit that like, subscribe, leave a comment down below with any kind of questions that you have, and I'd be more than happy to answer those questions in a future video. Until then, have a great day, and we'll see you in the next one. Take care.